Welcome to Lothian Profiles. Our first subject in this series of video profiles of veteran traders is Tom Cashman, a futures trader and floor broker, a 50-year member of the Chicago Board of Trade, and a member of an iconic Board of Trade family. He started working at the CBOT at age 15, helped in getting a floor messenger job by his uncles who were members of the exchange. After graduating from Loras College in Iowa, Cashman was teaching classes in chemistry at Northwestern University while working as a graduate student when his uncles brought him back to the CBOT. They backed him for a membership in 1962, then $6,600, and taught him how to trade. During his long career as a trader and broker in the CBOT soybean pit, he served as an exchange director, the chairman of the Floor Governors Committee, and chaired the CBOT's Ethics and Integrity Committee following the FBI investigations of the futures markets in the late 1980s. When he was elected to the exchange's board of directors in the early 1980s, he received more than 1,100 votes. The next candidate received just over 400. His career spans years of growth in the futures industry as new products were introduced. More people made use of the markets, electronic trading became dominant, and the CBOT merged with the Chicago Mercantile Exchange to form the CME Group. How did you get your start in trading?
My uncles were the ones that bought my membership, and they were the ones that schooled me on being a pit trader and a scalper. I was in graduate school, and I used to come down on Mondays when a day I didn't have class, and I would try to scalp wheat. And that's how I started as a trader, and then later on I became a broker, and eventually both an outright broker and a spread broker.
What did your uncles teach you about trading?
There was a book they put out a few years back, and I was lucky to be one of the ones that was interviewed for the book, and the name of the book is My Word is My Bond. And when you make a trade, your word is your bond, and you have to stand by it and always protect the marketplace and protect the integrity of the exchange, and that was the most important thing my uncles taught me.
How has trading over the years changed, and how has your trading changed with it?
Well, I think when you're younger, in your 30s and 40s, and you're more of a speculator, because I was always bullish in the market. I was always trying to be long. That was kind of my bent. And I always thought, well, if I have a bad year and I lose money this year, I'll catch up in the next bull market. Well, at my age, I'm not guaranteed to the next bull market, so I don't want to be risking anything. And the older you get, the more conservative you get. And now we've got tremendous volatility. We've got very high prices. We have all the asset allocators trading. We have all these funds trading. We have high frequency people trading. I mean, the participation is just enormous compared to what it used to be. And there's no controlling the intermarket movements where the market will break 30 or 40 cents for no reason or rally 50 or 60 cents for no reason. Well, years ago, that was the biggest move we could have, a 20 or 30 cent move. And today the moves are just tremendously large compared to what they used to be, and the risk is much more than it ever was. And there was a time where we were the first ones getting information. We had the teletypes on the floor, and something would come off, and guys would read it, and they'd say, "Hey, did you read this?" Oh, it wasn't even on the news anymore. Now, the people sitting in their offices on the internet, they get all the news before we get it. So the market movement is already going. It's already on its way from news that's going to alter the market once we hear about it.
What was trading like when you first started?
The history of the Chicago Board of Trade and us joining with the CME is a history of expansion. And initially we traded wheat, corn, oats, rye, lard, and loose lard. And then as time went on, we traded metals, then we went into the financials and started trading bonds. And each 10-year period would show another expansion of markets. And eventually we traded options, which has become one of the biggest markets on the exchange right now.
What is the first lesson you learned in trading?
Well, I always had a little saying that I would school myself on when I was I wanted to be protective of my position, and that was TWAP, trade with a plan. In other words, if you make a trade in the market, you make a trade for a reason. And if that doesn't work out, then you should get out.
Where did you come up with TWAP, trade with a plan?
I kind of thought of it myself, just to kind of limit my risk and limit kind of a discipline toward of things.
How do you come up with a trading plan?
Well, it might be a number of things. It might be the growing season, and it might be the fact that weather isn't you hear that weather isn't as good as people think it is, so you buy beans on breaks because you think that later on they're going to find out that the weather isn't quite as good. It might be harvest time. There used to be an old saying years ago when markets were more defined as far as the cash movement, where you would buy beans the first day of the World Series. And that was around October 1st. You would buy beans the first day of the World Series, not because it was the World Series. You bought it because that was the peak of the harvest. And from then on, the harvest would tone down. There wouldn't be as many beans cut, and there wouldn't be as many beans sold, and you would have a better chance to be long the market.
What is the most important lesson you learned?
The most important lesson that I've learned is the market is always right. The settlement price at the end of the day determines the value. You can say that beans closed at $12, but they're worth $14. Well, the clearing corp says they're worth $12, and that's what they're worth. The other lesson is be careful when everybody's the same way. When you have a situation like we've had this year where the weather has been awful and everything was very dry for months, and everybody knew the crop was being hurt, and everybody was long, well, there's danger there when everybody's the same way in the market.
What lessons did the market teach you the hard way?
The number one lesson is don't overtrade. If you have a position on that either you can't afford or starts to lose money and you don't have the money to cover it, then you shouldn't be trading that position. And the other thing is the abundance of people on your side of the market. Again, if too many people are on one side, it's very dangerous. You end up having conversations with people in the business, commercial firms, and you see charts, you see there's all kinds of statistics that'll tell you the percentage of people that are long or short and whether markets are overbought or oversold. Unfortunately, this doesn't always bear fruit because lately, when a market's overbought, it makes its biggest rally, and when a market's oversold, it's having its biggest break. So the technicals certainly aren't foolproof, but they can be used as a guide to where you are in the market and where you are as far as other people's positions.
What was your best trade like?
The best year I had trading was the 1983 market when we had a very surprise stocks number in June, and the market closed up the limit that day, and it went from 6.99 all the way to 9.25. And I was lucky enough that I was stuck long that day because I was stuck on an error, and I stayed long all the way up, and I got out. It went under $9, back over $9, under $9, back over $9, and I got short, and the market went all the way back to $7.50. And it was a very orderly market, and it's never happened before or since, but it was the only market, I guess, where I really didn't make a serious mistake, and I took advantage of both sides of the market.
How did that error happen?
I was spreading, and I only got half of the spread done, and the market closed.
What was your worst trade like?
The worst year was 1980, the year Reagan got elected, and there was a tremendous amount of euphoria in the whole country. Everything was strong, and at that time, beans were going through a period of big cash movement and big demand and consumption. And the Barron's came out with the article, Beans in the Teens. Well, beans got to about $9.50 that year, and everybody was long, and they just absolutely collapsed. And I had a huge position in the market, and it cost me a lot of money.
How do you trade in a crisis?
Well, that's a good question because if you have a position, you're, of course, subject to the market movement without an overnight news deal that would move the market tremendously one way or the other. So people tend not to trade. They stay out of markets when there is something like that, and if they're in positions, they try to get out of them. So it stops everything. It really halts all kinds of speculation and participation in the marketplace.
How do you manage volatility?
Today, it's very difficult because we're open 21 hours. So a position trader has to have a very small position that he's willing to risk big moves or put stops in or stay up 21 hours, and that's virtually impossible. And of course, the other end of that is trading options, and if you buy an option, your risk is limited.
What was it like in the 1970s when the Russians bought U.S. grain and soybeans?
Well, it was obviously very exciting, and there was a lot of rumors. I was one of the 3 brokers that had the orders to buy beans that day, and Cook Grain gave me an order, and they said, take the market up a nickel and buy all the beans you can. And if this was unheard of, that you didn't have a number of contracts to buy, a number of bushels to buy. So I bought a couple of million beans. I went over the phone. I said, I bought 2 million beans. He says, all right. He said, take it up another nickel and buy all the beans you can. Well, it ended up the market was up about 15 or 16 cents. They bought 28 million beans that day, but believe it or not, the market broke the next 2 weeks. Even on all that Russian news, it broke back about 15 or 20 cents. Then it took off, went all the way to $12.90. But that doesn't even compare to today's volume. 28 million beans that's just nothing compared to the kind of volumes we trade today. Of course, much bigger crops, but much bigger consumption, many more traders.
How much of an advantage was the information received being a pit trader?
It was something you would use as a guide more than anything else. You know, if there was a rumor about wheat going to Russia and Continental was buying wheat on every break, you'd say, well, there must be something to it because Continental's an exporter. But then as time went on, the commercial firms and the big spec firms started trading through other firms, so you couldn't track what they were doing. But it still would give you kind of an assurance as to what your bent was in the marketplace. If you saw commercials buying it and you were bullish, it made you feel better. Now, there are guys on the floor that say, if commercials are buying it on the way down, that's bearish because they're getting it. So there's two ways of looking at it. But when we were the only market, when the visibility gave you a lot of assurance about your position. Maybe it was false, but it gave you assurance. If you were short the market and there was a tremendous amount of selling on the close from the commercial firms, you say, well, the farmer's selling beans because the commercials are selling the close. Well, that might not be the case. Commercials might sell the close to get the farmer to sell beans. They might put the market down so that the farmers with all their trucks at the elevator aren't going to store it, they're going to sell it. So it could have been deceiving, but again, it was a way to somewhat evaluate your position.
What was trading like during the 1988 drought?
Beans traded up to $11, and the July beans were the nearby month, and we came down the day after the 4th of July, and July beans were down $1.50, and the rest of the market was down like 40 cents. So it all ended way before we got rain, which is unusual. But again, we are a futures market.
If you were starting over again as a trader, what would you do differently?
Well, I think I would take more advantage of all the different opportunities as far as technicals are concerned, as far as options are concerned, as far as option spreads, things that I've never been involved with. There's an awful lot of ways to access our markets. And for an old dog like me, I still use the basic methods and not the newer things that we have that are much more sophisticated and give you much more protection.